afternoon, outliers. I'm gonna preface this right off the bat. I'm not feeling so great, but I'm gonna power through this. Don't worry about me, Mom. I'll be fine. But you'll probably hear it in my voice and everything else. But gonna power through this, right? Good to see Randy, Michael, Jean-Louis. Glad you guys made it. So starting today, we're gonna start our new content lineup, and the first thing we're gonna do is say hi to Brian. Bonjour, Brian. First thing we're going to do is jump into this video I found called How to Start Trading Stocks as a Complete Beginner. Now, what I want to do is all of these videos are going to have some nuggets that are going to be great. I am expecting to see some nuggets that are just total nuggets of stuff. But overall, I'm going to give you my feedback. I'm going to give you my perspective on these videos. And like I said yesterday, my goal here is to give you as much information as possible every single day you come into the trading room, that it actually makes your life a little bit better and you become not only wealthier by trading with me, but also a little bit smarter by the end of the day. Tug says, "Hey, everyone." I'm sure he said, "Hey." All right, let's jump into this video here.
Stock trading, it's so easy to get overwhelmed and lost in the endless abyss of information that's out there. There's free ebooks, paid courses, and scammy YouTubers.
Here in my garage, just bought this knowledge.
It's extremely hard to decipher what's good information and what's bad information. As someone who's had to go through the exact same scenario myself, I found it extremely annoying. So that's why I'm making this exact video. So you can cut out all the bullshit and get a complete A to Z guide on how to start trading stocks if you're a complete beginner. Now,
sounds good. All right. Alex, nice of you to come back. It's been a while.
I'm not going to do the usual YouTuber approach where I wrap this all up in a nice little bow and make you pay $299 for my course. The best part of the series, it's completely free.
Free.
Now, after trading for around 8 years, I can say there's a lot of information we have to swim through. My job is to go over that information in a simplistic and efficient way so you can understand the maximum amount of information possible in the shortest amount of time. That's the goal, at least. Now, there's a specific question I get asked almost every single day in the comment section from new traders. Trader after trader asking the same exact question. And that question is,
how much money do I need to start trading?
In my opinion, you can start with any amount. You can start with $500. You can start with $1,000. Honestly, you don't need a giant portfolio. In fact, I don't know. I'm sure there are, but I'm just thinking off the people who I know, including 5 market wizards, didn't start with giant bankrolls. Like they may have started with a few $1,000s, maybe not just one, but I don't know anybody who started with a giant bankroll. In fact, the old adage is, do you want to learn how to make $1 million in the market, right? If you want to learn how to become a millionaire in the market, Mikey Mike, you'll like this. If you want to learn how to become a millionaire in the market, start as a billionaire. Yeah, right. Because when you have a big bankroll, in fact, I would say having a big bankroll is a terrible thing to have when you first get started, right? Because you feel like it's going to the casino. And if you're going to the casino and you got a big bankroll with you, you're going to be throwing stuff out, right? You're going to be playing, you're going to be messing around, and you may not be taking seriously the risks that you should be taking serious when you are trading, right? Because let's say if my initial bankroll was $100,000, I could lose 5,000 on this one. I could lose 10,000 on this one, whatever. Cost of tuition, right? And by the end of the month, I might be down to 25,000 because I didn't take that risk seriously. So I would say personally, starting with a small bankroll and moving up from there is so much more advantageous, so much more, because if you lose, you're going to lose small, right? It's not going to affect your lifestyle. Hopefully you're not going to lose your house, right? And then once you figured out how to trade, which is what I did, start layering in additional funds, right? Start adding to that bankroll. And I had this conversation not long ago with somebody, and I think he had 50,000 he wanted to add to his portfolio. I think it was like doubling it. And I said, don't do it all at once. Do it maybe 10% a month to get used to that bigger position size, right? Because if you're used to buying 10 options and now you're buying 20, that sounds great. You're making twice as much, but you're also losing twice as much. So there's a psychological benefit there of rolling into that bigger position rather than jumping all in. So to this point here, how much should you start with? Honestly, I would say less than 5,000. I think, and I don't know what he's going to say. I think if you start with less than 5,000, you will be a significantly better trader 6 months, a year from now than if you start with more than 5,000, because you got to make those trades count. And you can't get complacent on that risk. And those are the habits you need to develop ahead of time before you have those big accounts. Trump and Hunter Biden. I guess they had those big bankrolls, right?
And my answer might just surprise you. Is it $100? Is it $1,000? Is it $10,000?
My God.
What if I told you the answer is $0? Let me explain. One of the
Hard to trade with $0 unless you're paper trading, which honestly is a great thing to do for the first 6 months as well, because when you paper trade, you will get a hold of the situation. And if you are smart enough, you'll be able to start making a plan, paper trading with zero risk. But if you're smart enough, you can translate that to real money. Now, having done both, I can tell you it is a world of difference. And I'm sure you've been there too. It is a world of difference to go from paper trading to real money trading, right? There is a real emotional factor that changes when you put on real money at risk. In fact, my wife, when this was a few years ago, I've told the story before, so if you heard it, let me know. It was I don't remember if it was the first or second time I blew up my account, but I remember telling her about it first time because I lost 2/3 of my account in 60 days of trading. And I remember her saying, we were driving up the Dallas North Tollway, and for some reason she was driving, and she never drives, right? She never drives. I don't know why she was driving, but I was like, listen, I got to tell you something. I just started trading. Yeah, 2/3 of that is 2/3 of that's gone. And I'll never forget because she went like, and she looked over at me and she's like, what did you just say? She goes, can't you learn to trade with fake money? I was like, oh, that's a really good idea. Which was convenient because I had almost no money left. So I took 6 months and paper traded from that point forward for 6 months to really build up my chops before I started trading with real money again. So that may be where he's going here, but that is my experience. Sebastian, good to see you. Brian says, paper trading will be just like a big bankroll in a casino. Yes. And that is why I say, if you can develop the chops using that, you should be fine. And that's what I did. Was I used whatever, I don't even remember what broker it was, but they had like $100,000 paper trading account, and I treated that as if it were my real money. Because if you're paper trading, you must go into that mentality of, I have to treat this as serious as possible because this is the best practice I'm ever going to get without any risk on the table. Randy says it is so different. Yeah.
The biggest mistakes beginner traders make is they just instantly jump in the market with their life savings without any experience at all, just because they saw some stock TikTok trader in front of a Lambo and thought, hey, that looks fun. Considering they have no experience, they lose all of their money, then end up saying, maybe this isn't for me, then end up quitting and never try to trade stocks again.
I quit!
And the sad part is, this is what happens to the majority of traders. What I'm about to tell you is how you can completely avoid that altogether so that doesn't happen to you. There are devices called trading simulators or paper trading, which is basically a platform where you can trade with fake money so you can test things out, test different strategies, test your risk management techniques, test controlling your emotions, or maybe...
Now, Steve Burns and I had this conversation, and this is why I say, if you're going to paper trade, you have to treat it as if it's real. Because you can get very complacent with paper trading. And then when it comes to real trading, completely throw it out the window. Steve is not an advocate of paper trading. And I guess, Mike, I'd speak directly to you as a new trader. I would say, get familiar with trading using a paper trading account. Meaning, figure out which buttons to click. Figure out how the executions work, right? Imagine you're going in an option chain for the first time. clicking the buy, clicking the sell, all that kind of stuff. Figuring out how the platform works with paper trading. In fact, when I get a new platform, which will be coming hopefully by the end of the year, I know we're all waiting on this big announcement. I guarantee you I will be paper trading it specifically for execution, because it is a little bit different interface. And I don't want to risk clicking the wrong button and losing money just because I clicked the wrong button. So I think there is a huge place for paper trading in that regard. But if you can't treat it as if it's real money, then you shouldn't paper trade, and you should just go to real money. But do it small. Do it with $1,000, right? Do it with something that you're okay with losing.
Maybe you want to test out different trading styles like shorting. Most new traders skip this step entirely, and honestly, it's the most crucial step out there to becoming a successful trader. That's why I'm listing it as my very first step. There are a lot of different trading simulators out there. Some are paid, some are free, but the one that I would recommend the most is Webull's, just because it's free and they have a really user-friendly dashboard to where it's not really confusing and it's really easy to use. And I really like their name, Webull. Webull. So that's what I would recommend if you want to try one out. Plus, I think they give you 12 free shares of stock or something like that if it's your first time signing up. So that's Webull. I just recommend doing is getting on Webull, start paper trading, and just do what you would normally do if it was real money. But the trick is you have to act like this fake paper trading money is real. Act like it's your actual capital. Put the concepts that I'm about to teach you in this video series to the test. But not only that, take it a step further. Record every single trade you take. If it was a losing trade.
Oh, yeah. Oh my gosh, yeah. That is the secret sauce to my success. Secret sauce that I'm never going to tell you, but I'm going to tell you right now. Journaling every trade. It can be in a spreadsheet. It can be on paper. It can be whatever, right? I like a spreadsheet because I'm a nerd. But by having that journal, you can go back and you can see your progress. You can see how much better you're getting or how much worse you're getting. You can adjust your strategies, right? If you don't journal your trades, you're literally guessing, right? You're saying, oh, I guess I would have got out here. I guess I would have got out there. Or, I mean, maybe you don't even like go back and look at the trades you put on. You're just like, yeah, that seems like I would have done that. But would you have, right? Journaling your trades is so important. And that's how we have developed such a strong trading strategy, such a profitable strategy, is because I can go back and I can say, this didn't work, this didn't work, this worked, right? I'm really good at noticing patterns, right? That's just a strong suit of mine. And you're going to be great at something else. But if you can identify what's working, what's not working, and then make changes to do more of what works and less of what doesn't work, you're going to be better off. So that's a huge tip right there. I'm really glad he said it. Randy says, yep, no trade errors. I am not going to have one of those. If you go into it after learning how to trade via OVTLYR, then it would be great because you understand the psychology of trading. Oh, well said. Wes, good to see you. How you doing, my friend? Don't accidentally buy puts when you're wanting calls. Yes, I've done that. But what's happened more recently, you guys were there. This happened to me. I sold calls when I meant to buy calls. I did not mean to do that. And I was struggling because it wasn't as liquid as I wanted to get out. So that was frustrating, right? And it's literally just, click here or click there. And I just clicked the wrong one. So yeah, you don't want to do that.
Write down what you think you did wrong. Did you get greedy? Did you move your stop loss? Did you let your emotions get the best of you? Did you follow your rule set? Record everything for every single trade. The more, the better. This will exponentially speed up the process of you becoming a better trader. But not only that, you should record all your winning trades as well. Write down what you think you did right. That way, you can look back at it and try to repeat the concepts you did right. When first starting out, you should not be focused on the money aspect of trading at all. You should,
which, as you know, I tell you all this time, turn off your P&L. Because if you have a profitable strategy, you don't need to see the P&L, because seeing the numbers on your screen, maybe you're up $17,000 and you're super stoked, or maybe you're down $6,000 and you are in the gutter, right? Your emotions will dictate your outcomes in this case, right? You're going to do something you wouldn't have done normally. So by turning off your P&L, and I don't even look at my P&L until after each trade is closed, and then it's just math, I don't want you to see your open P&L, because it will absolutely mess with your head, good or bad. All that matters is following your entry and exit signals. At the end of the day, if you just follow your entry and your exit signals, that's all you got to do.
Purely be focusing on your trading strategy, improving said strategy, and trying to learn as much as possible. If you do all of this, the making money part will just come naturally. Doing just this one simple step will let you pass hundreds of thousands of new traders on the learning curve. This tip in itself is a game changer. I'm serious, every new trader should do it. That's my first step on how to start trading stocks as a complete beginner. I was thinking about making this a video series where we go completely from A to Z on how to become a successful trader. This is going to include everything: risk management, trading psychology, chart setups, market structure, candlestick patterns, trading strategies, everything. A to Z, beginning to end, everything you need to know as a beginner trader. If you guys are interested in something like this and you guys get this video to 1,000 likes, I'll make this a complete series and a total blueprint on how to start learning.
I have no idea. For some reason, it's not showing me the likes. But this is what we're going to be doing as well, is going and trying to be very useful with your time, right? I want to make sure every single day you leave the trading room wealthier, if I can help it, and smarter at the same time. So let's jump over into our market analysis now. All right, welcome to the OVTLYR trading room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Christopher Yule. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using the OVTLYR data. I call it the golden ticket trading strategy, which Peter emailed me, or Discord messaged me, and he is working on his own process to pretty much automate this, which I was so stoked about. So Peter is working on something really cool. Additionally, Mahesh is planning in the first quarter of next year in coming up with a strategy library, which is going to be so cool. And we really do want your feedback for that, because while I am the biggest advocate of the golden ticket trading strategy, it may not be right for everybody. And I'll be the first to say it's not going to be right for everybody. So we are going to come up with a myriad of strategies, and eventually the plan is to make them all automated. So this is just going to be one tool in the toolkit. So I want you to be thinking about what strategies you'd want to see, right? Maybe your strategy is covered calls on ETFs when they're over their 20-day moving average, right? That's a simple strategy, and it may work awesome. So that's what we're talking about. And this is going to be really cool. So real quick, how does OVTLYR work? It's a 4-step process. OVTLYR monitors how investors are reacting to changing market conditions, news, price movements, and the economy. OVTLYR determines if investors are acting irrationally fearful or greedy, and by how much. OVTLYR gives buy and sell signals when those irrational behaviors reach an extreme. Number 4, allowing you to get into the stock before the OVTLYR move happens. So let's jump over to our Discord and check out our member highlight of the day. So rolling through the Discord, kind of quiet the last day or so, but yesterday we talked about capital efficiency. So I wrote out the formulas there for Michael Wales, excuse me for that. And Mahesh also, we talked about the purple formatting on R0 and R1. He said he's going to look into it. Bob was asking about the Black Friday sale, and it looks like Mahesh is going to extend that to anybody who wants it. Email him, and he's going to get you that Black Friday sale price, which is awesome. And I believe that's all that's happened. Other than Mahesh said he did a roadmap on here. Let me find it real quick. Was it this one? Oh yeah. Product related announcements. The strategy library is what we're talking about here. And then broker integrations. So we are going to make this so sick. So sick. And we're going to make it so easy, right? Because right now I'd say there is definitely a lot of legwork to go along with OVTLYR as a stock analysis tool platform. There's definitely some legwork to go along with this, right? Like, what does each one of these things mean? How do I trade with it, right? But at the end of the day, your objective, my objective as traders is how do I use it to make money, right? That's the number one objective. I will not fault you for saying it's anything else. The number one reason to use OVTLYR, or to trade in general is to have more money in my account today than I did yesterday. Doesn't always pan out, but that's the objective, right? So we want to make it as easy as possible using OVTLYR to achieve that one result. So be sure to share your stories in the Discord and be sure to tell everybody about OVTLYR, right? Hit the like button as well, because that helps YouTube tell other people. And like I say, we're going to be going hard on YouTube content. So that would really mean a lot to me if you could hit that like button so YouTube shares it out for us. So let's go take a look at the market. We want to see the 10 over the 20, price over the 50 on the SPY. And if we go to the market here, that's what we see. Continue to see it. But this looks like a little bit of overhead resistance right here. Right? That candle didn't quite make it over yesterday's high. I'm not saying this is the top. I'm not. I'm saying we have a sell signal in OVTLYR. I don't know when the market's going to pull back, if the market's going to pull back, but I won't be trading right now because the master key, as you know, needs to have the SPY with a buy signal to go long. Right now, it's got a sell signal. Let's go take a look at the market breadth. I haven't looked at that yet today. I was actually surprised yesterday. I didn't realize the breadth was bullish. The trend is up. Breadth is actually curling back down as of today. You can see the breadth peaked and is curling back down. So I would imagine that that comes back down tomorrow. You know what? There's going to be weeks at a time when I don't trade. But OVTLYR delivers you new opportunities every single day. So you absolutely could find a new trade for you. But for me, I don't see any trades for me today. So we're going to spend the rest of the time looking at New Trader, Rich Trader. We are 15 chapters deep at this point, if you can believe that. So of these 15 chapters, do me a favor, in the chat, type in a number 4 if this has been useful to you. I would actually really like to know that. This is a vote. Type in a number 4 if this has been useful to you. If not, type in the letter R, right? This is our vote, right? Number 4 or letter R. Let me know if this is useful, because I want to make sure that I'm not wasting your time and I'm actually like helping you, right? So let's go to this. Chapter 15. New traders trade against the trend. Trend traders follow the market trends. I have the best story for this. So when, I can't remember what year it was. My son was probably 3, maybe 2015, maybe 2016. My son and I were at the library, public library, and these particular traders that I was following at the time, they had said, in fact, I mentioned it yesterday, whenever you see the market up, sell calls against it. Whenever you see the market down, sell puts against it, right? Completely opposite of what you should be doing. And at the time, QQQ was hitting new all-time highs, and so I'm at the library, and the only reason I put the trade on is because I saw it hit new all-time highs. I was like, sweet, I'm gonna sell calls against this. And that was one of the worst trades I could ever put on, right? It was like the moment that I put that on, Qs were going up like hand over fist day after day. That was when Apple couldn't go down. And I look back at that trade and I'm like, what did I even do that for? I didn't have a reason to, other than the market was up. And so I was just like, I'm going to go against the trend. Number 1 rule in trading, don't be a contrarian. You've probably heard the phrase contrarian trading many times. I'm here to tell you, contrarian trading is bankrupt trading. I've done it. There's no reason to be a contrarian, right? If there's a speeding train moving down the tracks at you, do you actually want to step in front of it and say, hold up, I know better than you, you need to turn around? Or do you want to step aside and as it goes by, grab that handle and ride that train all the way to Atlanta? I mean, you tell me. Do you want to get steamrolled by the train, or do you want to be on the train when it's going? Contrarian trading is standing on the tracks, putting your hand up and saying, train, you've got to stop. That is quite enough. You need to turn right around right now because I said so. One of the most stupid things you could do as a trader. All right, we're seeing some 4s in here. That's what I want to see. Thank you, guys. Contrarian trading is the toughest. It's the easiest to go bankrupt with, I'll tell you that. So rich traders follow the trend. When studying charts, he saw more trends over the long term and more range-bound charts in the short term. Interesting note. He could now identify uptrends as stocks with the current price above a 50-day and downtrends because the current price was under the 200-day. It was so obvious to him that when the market was in an uptrend, most stocks were in an uptrend. So obvious. Now, I remember having that conversation with Steve. This is one of the best conversations because I was so ignorant at the time. I was on Skype with Steve, and he said, "Chris, is the market or is the stock trending up or is it trending down?" And I said, "I don't know. How do you know?" And he said, "Well, you add a trend line." And I'm like, "Well, how do I add a trend line?" That's how rudimentary it was for me, right? So where you are today, trust me, I've been there. How do you add a trend line, Steve? Add in the 10 EMA. Okay. So I added the 10 EMA. What does that tell me, Steve? When it's above the 10 EMA, that's an upward trend, right? When it's above or below the 10 EMA, that's a downward trend. Now, as you know, trends don't last forever. And that's why we have those confluence of the 10 being the short term, 20 being intermediate term, 50 being long term, right? When your short and intermediate term cross and price is under your long term, that's a downward trend. Does that make sense, right? Having that short, intermediate, and long-term moving average all working in the same chart like this gives you so much more information. So yeah, I've been there. Trust me. Like as basic as you could possibly go with stocks, I was there. Okay, so what are the best ways to identify and trade trends? That's a good question. You search for increasing volume. You look for the highest volume stocks and ETFs. As you know, volume is a key thing for me. Look for new highs and new lows. You'd like to find a stock that has been in a tight price range for a few months, like between 95 and 100, that suddenly breaks out to a new all-time high. As I've said, that's a bullish thing of 101 on twice the average daily volume. That's a Minervini thing right there. That's a trend right from the start. Sellers are no longer willing to give up their stock at 100, and buyers are willing to pay 101 because they think it'll go up and they'll make money. Trend traders don't care why it's going up, which is what I say all the time. I don't care about the news. All I do is follow price, and you should too. They only care that it's happening. Trend traders are not bullish or bearish. They don't care which direction the market is moving, only that it's moving. The trend trader system would have been just as likely to sell the same stock short at 94 as he would to go long at 101. It's so refreshing to see exactly how trading is done, written in black and white. A trend trader needs only to catch a large piece of the price movement inside a trend to make money. A counter trend trader has the odds stacked against them because they have to pick big reversals at the top or bottom to be successful. And it is almost impossible to pick that reversal. Almost impossible. Note here. Literally, the worst trades I ever made were trying to outsmart and get in front of a moving trend rather than trading with it. I wrote that to myself at one point. I wish it would say the date. That would be so interesting. Literally the worst trades I ever made were trying to outsmart it and get in front of a moving trend rather than trading with it. That is interesting to see. Young Chris with better eyesight, more hair, less wrinkles. Yeah. Time doesn't wait for me or you or anyone else. Do I have to buy a new high as a trend trader? No, of course not. You can establish that the stocks on your watch list are in an uptrend. You can also buy on pullbacks to create better risk-return ratios. You can measure pullbacks by looking at charts for support. Your stock may have a support at the 10-day or the 20-day over the last 2 months. You can verify the price as found support at the 20-day, and then it goes back up. So this is a good example of that, right? Let's say, for example, now I don't trade this way. I would rather trade breakouts versus pullbacks because a pullback can be bearish, right? The SPY found support on the 20-day right here. And that may be a strategy that you would want to employ, right? You see it close right at the 20-day, then close back over and has bounced significantly since then. A great strategy here for that one. So if you see, and I'm just eyeballing this, right? This is not a trade recommendation, right? If you see a pullback on the SPY down to, under the 10, above the 20, that could be a buying opportunity, right? Doesn't mean every trade's going to work out, right? Because, I mean, look right here, right? And if you were keeping your risk tight, you would have got out. That was the election. So not exactly how I trade, but it could be great for you. Why am I the only one that clicked the thumbs up? Damn it, Randy. You're right. Why are you the only one? Let's go, people. In a strong uptrend, the 10 and 20-day moving averages may not be touched by the price for weeks. For weeks. I mean, that's a good example right now. The 10 and 20-day, I don't know when they're going to be touched, right? So if you're waiting for that pullback, it could be $100 higher before you get that pullback. The moving averages will trend higher in uptrends. So if you're only using the moving average as your signal, you'll make a profit when your stop is triggered because the price at which you sell is much larger than your buy price. So meaning, if you bought in when it closed over the 50 EMA here on September 10th, it was roughly 547. The next time it closed under the 50 EMA was here on October 31st at 568. So that's a $20 move on the SPY if you just followed the one moving average, the 50 period moving average, right? So of course, make different types of trades that fit your personality, right? I'm not saying that this is the only way to trade, but there's lots of different ways to trade. Additionally, price moving above the long-term moving averages, like the 200 and 250, can be used to signal the beginning of a new uptrend breaking out of a downtrend. These systems create some of the best risk-reward ratios and are used to signal the end of a downtrend or bear market and the potential for a new uptrend or bull market. A good way to lose money is to go short in a bull market or long in a bear market. That is a good way to lose money. The probabilities are stacked against you. It is arrogant to think that you can call tops, call bottoms, and market reversals based on predictions. All decisions must be based on quantified signals that show the potential of capturing a trend. Steve, oh my gosh, working with him directly, he was always about the word quantified. Oh man, that's funny to see that there. The only thing traders should attempt to do is measure the direction of the market, how to trade it effectively, and where to cut their losses when it reverses. All right, note to Chris. What did I say? Arg, that was me. I wrote that. Arg, that was me. A good way to lose money is to go short in a bull market and long in a bear market. The probabilities are stacked against you. The best trend traders win between 40 and 60% of the time. They're successful because they win big and they lose small. And you can even make that like, you can even expand that out, right? Let's say you got a 70% win rate and you still lose small. I mean, you could see like buckets of money, right? My particular returns, my wins and losses are roughly the same size, a little bit bigger on the wins than on the losses, but my win rate is close to 80% at this point. So it's very profitable, right? So you don't have to have those giant wins if you can have multiple wins. I trade a system that is purely technical, based on past performance. My system only depends on the trend itself, not my opinions or news stories. I don't trade off fundamentals or earnings expectations. I trade based on other traders' participation in the market, as is illustrated through their buying and selling. I don't predict the trend, I follow the trend. I measure the trend through volume, price, and moving averages. Trading is rocket science. You find a rocket and you ride it. I love that. Trading is rocket science. You get on a rocket and you ride it to the moon. Quantified trading signals can be based on different yet equally profitable strategies. Momentum signals are based on buying strength. Momentum traders wait for a strong move in the stock and then buy and hold a position for a short time if it continues to move in their favor. That's this guy, momentum trader for sure. Breakout signals are based on buying all-time highs, 52-week highs, or moving through resistance and trying to buy high or sell higher, trying to buy high and sell higher. Breakouts are bought to catch a strong and fast-moving stock. Buying a long-term price support level or an oversold oscillator like the RSI attempts to create a good risk-to-return ratio based on buying deep dip in the market or stock that is in historical uptrend. Finally, trend-following signals attempt to move in the direction of the long-term trend by the path of least resistance. Jesse Livermore, one of my trading heroes. There's only one side of the market, not the bull side or the bear side, but the right side. It took me longer to get that general principle fixed firmly in my mind than I did most of the more technical phases of the game of stock market speculation. There is a very good book called Reminiscences of a Stock Operator by Edwin Lefebvre. It's like Brett Favre, right? It's spelled weird. But Edwin Lefebvre, and it's supposed to be based on Jesse Livermore. That is a fantastic book, Reminiscences of a Stock Operator. So add that to your reading list. That is one that's worth your money there, Mikey Mike. So that's going to wrap it for today, right? I don't have any trades to put on. I don't know where the market's going, but I don't have any signals to get me into the market, right? We covered earlier how to start trading stocks as a complete beginner. And then we covered this chapter in Rich Trader, New Trader, Rich Trader. So doing my very best to give you the very best content that there possibly is out there. So thank you so much for being an outlier. We couldn't do this without you. We want to pay you back every single day by helping you save time, make money, and start winning with less risk together as a team. Additionally, you probably still can get that Black Friday deal if you email Mahesh over in the Discord and let us know if you need anything in the Discord, right? Be sure you tell everybody about Outlier and hit the like button like Randy was saying. Have a fantastic afternoon, and we will talk soon. Have a great day. Talk later.